So thank you for joining us today for today's webinar. We will be focusing on the proposed New South Wales property tax from the perspective of older people living in New South Wales. Before we get into things, I'd like to give a brief introduction to the Combined Pensioners and Superannuants Association, or CPSA, for those who are not aware of who we are at CPSA. So the Combined Pensioners and Superannuants Association is a non-party political membership association which serves pensioners of all ages, superannuants, and low-income retirees. CPSA's aim is to improve the standard of living and well-being of its members and constituents, those largely being older Australians. My name is Luke Medic, and I'm the Senior Policy Officer here at CPSA, and with me today is Paul Vistige, CPSA's Policy Manager. Today's webinar will follow a format in which I'll be asking Paul a series of questions about the property tax proposal. But before we do that, I'd like to just give a rough outline of the new proposed tax and how everything will work today. So in November 2020, the New South Wales budget was announced, and in the budget, the New South Wales Government said that they will be attempting to move away from stamp duty. So the New South Wales Government is proposing to give home buyers the choice to either pay an upfront stamp duty tax as you would now when buying a new home, or any home, or opting to choose an ongoing smaller annual property tax. It's been made very clear that this will only apply to future home buyers. So for those current homeowners, you need not worry about being taxed twice. That will not happen unless you choose to downsize or you choose to buy a home. The proposal states that once a property buyer chooses to pay property tax, the property will always be subject to this property tax. The next buyer of the property will not have the option to pay an upfront stamp duty. They must continue to pay the annual property tax. New South Wales Treasury has predicted in their proposal consultation document that it'll take around 20 years to convert just half of New South Wales properties to property tax. New South Wales Government has said that this change could put money back into the pockets of New South Wales residents and get more people into homes by reducing the upfront costs of home buying that stamp duty imposes. These changes will have an impact, obviously, on older Australians buying homes in New South Wales. The aim of today's webinar is to get people planning ahead. So we're going to be actively weighing up the options that this change will have on downsizing in the future. So viewers, you will become aware of the potential positives and the drawbacks of the stamp duty change. Okay. So Paul, you just finished CPSA's submission to the New South Wales property tax proposal consultation paper. If I could ask, what's the verdict?
Well, the verdict is that I can't really see this succeeding. For most people, it seems that stamp duty is far more attractive than paying an annual property tax. With stamp duty, obviously, you know what you're up for. With property tax, you don't. You may know what it is in the first year, but it's essentially, a double council rate. You don't know what's going to happen in future, how high that tax will be, and also if you, trust the government not to put up the annual property tax beyond what they are saying at the moment, and you just think, well, I'm going to be at the property for 5 years. I think it might be cheaper for me to go property tax. Yeah, that's a calculation you can make, but I think it's a very dangerous one. And I think certainly investors, certainly people who want to really settle down in a property, are not going to opt for the property tax. And obviously the New South Wales Government understands that because they themselves say it's going to take 20 years before half of all properties are under property tax. So they're going to rely on first home buyers who typically buy any property they can afford and will then trade up. So they would be expecting to stay in a property for what, 3-4 years, and for them, of course, it's very attractive to pay property tax because it's cheaper, and it also means that they don't have to find extra capital to fund stamp duty. On the whole, I think people would be well advised to stay away from property tax. So.
Okay. Interesting thoughts there. Sorry, I was getting a bit of feedback there. Thanks for that, Paul. I thought maybe if we're throwing a lot of terms around like stamp duty and property tax. So I thought it might be worthwhile if we just sort of step through each term, just as clarification for viewers. Just getting really basic. What is stamp duty and why do we have it?
Okay, stamp duty is very old. It dates back to city-states. Apparently Venice was the first place to use it. And it's basically, you pay your money, you get a stamp on a piece of paper, and you've paid your stamp duty. It's basically a lump sum that you pay, certainly for property, and then you're in the clear. But that is obviously different from what is proposed now. The property tax is indistinguishable, I would say, from the council rate. It is basically levied on the unimproved value of your property. That is unimproved, that is without, as if there were no buildings or anything on there, just land, the land value. What is proposed is that there's going to be a fixed amount that everyone pays, and then a percentage of the unimproved land value, which then produces the whole property tax for the year.
Okay, cool. So we have one that's, and I think one of the things that's been pointing out by the government in this switch is that we have, stamp duty is really subject to the boom bust cycle. They say, so when housing market's good, the government receives a lot of money in terms of stamp duty. But the argument for this annual property tax is that it produces a stable income.
Yeah. I think it's a little bit of a furphy argument, to be honest. It's not really mentioned in the consultation paper. Obviously, boom bust cycles, the way to manage those is not to spend all your money in a boom cycle, but that is what governments tend to do. Now, that is not a good reason to introduce a property tax, I don't think. They would simply have to have the discipline to put money by, like normal people do in conducting their affairs. But it does have an effect. Obviously, it's going to smooth revenue streams to the government. One of the things about stamp duty and the boom bust cycle is that a government that is in office and there is a boom on is tempted to spend all that money because they don't want to leave it behind for when the opposition wins office. That would be an enormous waste now, wouldn't it? And you see the effects. There's no saving for the future by state governments, and certainly not in New South Wales.
Okay, so you argue that it's not really a good enough option for switching, and that's one of the bigger arguments, especially by economists labeling property tax an efficient tax, whatever that means. But are people right in saying that they already pay an annual property tax, in the form of council rates?
Yes.
Yeah.
I mean, the council rate, there's only one rate these days. The rest are charges, and the council charges are set in a different way from the council rate. The council rate is still based on your unimproved land value, and it's exactly the same thing that the New South Wales government is proposing. So essentially what they're proposing is that they're going to pay double the council rates and in fact it's very likely that the New South Wales property tax, if it gets up, will be collected through councils. They are well placed for that, and if viewers recall the Fire and Emergency Services Levy, which failed, was also going to be collected by councils, and that was because the Fire and Emergency Services Levy was also basically a land tax, and that is what is likely to happen. Of course, the property tax, I already mentioned it, is going to probably be more like the council rate than people would want. There are always complaints about council rates and how they go up, and it's all too much. That, of course, is also going to happen with the state property tax. You can bet your house on it, so to speak, or your unimproved land value, if you like. So yeah, that's what's coming our way. And the only thing is, of course, that the property tax as it is proposed is not going to affect anybody. That is the bet that the New South Wales government is making. It's not going to affect anybody that doesn't want to be affected for a long, long time. But once it's in, then people are going to feel the pain. And of course, viewers can make their own calculation. 20 years, in 20 years' time, half the properties in New South Wales are expected to be under property tax. So it's going to take an awful long time, and most of us that are interested in property tax as an issue, most of us are, I wouldn't say well advanced in years, but advanced in years, or semi-advanced in years, and we're not going to be affected. We're not going to pay it if we don't want to.
Okay. That may provide some comfort for some viewers, I hope.
Yes.
But I was wondering, Paul, if we could have a look at, how much an annual land tax would cost. I know you've already mentioned that it goes off unimproved land tax, so each sort of region will have a different calculation, and it'll be independent for each person depending on where you live. But is there a broad sort of approach? How are we going to apply this annual land tax?
Yeah, well, the consultation paper put out by the New South Wales government foreshadows a fixed component of $500 a year, and then 0.3% of the unimproved land value. So say your unimproved land value is $300,000. It's going to be, what is it? So about $900 on top of the $500. So it's going to be $1,400 as an annual tax. According to the New South Wales Treasury, I'm just checking here, the average property tax would be $1,812, so 1812, which I think was the Battle of Waterloo.
Right. Okay.
Perhaps that's that sort of gives a little bit of a prediction of where this tax might go. It might not leave the battlefield.
That's a great bit of analysis there, Paul. Thank you for that.
No worry.
I guess it's good to just keep that rough number in mind, and then then it can be up to people to make the calculations, and if you are thinking of moving, then that's what you have to weigh up. If this does get up, will I be better off paying the stamp duty up front, or am I better off doing paying this annual property tax. So that sort of leads me to my next question. You know, which one would be more attractive? You know, I know there's a lot of individual components here that it'll be different for a lot of different people, but are there any sort of you know, points you'd like to make around, you know, how do you weigh up these two options?
Yeah, well, you know, a simple calculation is how long do you expect to be at a property? Obviously, if you are going to be somewhere for 10 years, then it's probably going to be much of a muchness. You go beyond 10 years, you're better off paying stamp duty. And you also have to keep in mind that you can't really calculate this accurately because you don't know what property tax levels are going to be from year to year. So you might, you know, it's an impossible calculation to make. The rule of thumb is to say, look, am I going to want to stay at this property for a long time? Go stamp duty. And, you know, most people buy a property for a longer period of time, so they will go for stamp duty. It's even expected that you know, as property tax takes hold slowly, that stamp duty properties, if we can call them that, will be more attractive and will be more expensive than property tax properties. So properties that have been opted in to property tax and can't get out. Yeah, I think for most people it will be a very simple decision, not requiring spreadsheets or even a calculator. Stamp duty is far more attractive.
Okay. Maybe a slightly more complex thought. For age pensioners, what sort of implications would this have, you know, weighing up the benefits of having this upfront cash that you no longer have to spend on stamp duty? You know, will that be a benefit, or will, you know, that be eroded by this annual property tax?
Yeah, well, that's right. I mean, if you are going to sell your house and buy something cheaper, if you can manage that, you will have money left over from the proceeds of the sale of your old house. And you might say, well, I'll just pay an annual property tax from, you know, my savings, and my savings will be invested so that will generate income as well. And you might want to work it that way. But keep in mind that once you do that, surplus money, if you can call it that, will be taken into consideration by Centrelink when it means tests your assets and income for the age pension. So it could well lead to a reduction in your pension.
So for people on pensions, it doesn't, on the face of things, it doesn't seem all that attractive, and it seems more or less overlooked. You know, you sort of end up in the same position regardless of which, you know, option you choose.
Yeah, it's not going to make. I'd say, you know, you keep it simple and go stamp duty. But certainly, you know, people that are under the lower asset limits, it might be attractive to them, because if you stay under the lower asset limit, obviously it's not going to affect your pension. But yeah, that's something that people will have to work out themselves, and if need be, with a financial advisor.
Okay. And I guess other things that come up, you know, if you're on the pension, you're on a low fixed income, really. That there's no opportunity for that to increase unless the government chooses to increase the age pension, which is unlikely. So what happens if you are unable to pay this property tax every year? You know,
Yeah.
you kicked out of your house, or what happens there? Is there something been proposed?
Has provision been made? Well, yes and no. let me say this: the New South Wales government is saying that one of the things about this property tax is that it will make downsizing easier. I think, from our discussion just up till now, it's quite clear that CPSA doesn't think that that is the case at all. It's if you can afford to downsize, if you can arrange that, you would go stamp duty to be to have certainty. So it's not going to make it easier for you to be. Property tax is not going to make that easier. But the real nastiness, I guess you'd call it, for the property tax is for people on lower incomes. You have to find an average of $1,812, maybe more if you live in a more expensive property, and you have to find that every year to pay. And if you can't pay that, the New South Wales government has foreshadowed that they are going to have a financial hardship scheme, but they haven't given detail as to how they would do that. The only detail they've given is that it's going to be on a tax deferral basis, and that is a very dressed up way of saying that they're going to apply the property tax as debt against your house. In other words, it's a reverse mortgage. It's home equity release that would pay then for your property tax. But it is unclear as to how they would, what the how they would means test. I mean, with Centrelink, you know exactly how they means test. But here, there's no detail given other than, well, if you are in financial hardship, you won't be kicked out of your house, you won't be bankrupted. We'll just apply the property tax against your house and want you to sell it. And in many cases, that would be when people die. We get paid. That's all the detail we've got. And for many people, that will be very unattractive because once you start encumbering your property, your house with debt, it becomes even more difficult to downsize, and you will really be stuck. On the other hand, if you are stuck already, you simply can't afford to downsize, then property tax against your house doesn't make all that much difference, I guess. It's something that people have to consider, as to the specific circumstances.
Yes. Added to the list of things to consider with this big policy shift. So similar things have been introduced across Australia, most notably in the ACT. In the ACT, they introduced a pensioner discount for pensioners opting to downsize. If they bought a house below a certain limit, a certain cost, they would not have to pay stamp duty, nor would they have to pay property tax. And that sort of scaled up in the amount of stamp duty dependent on the price of the property. Is there going to be any sort of similar discounts given to pensioners in New South Wales?
Well, it's certainly not mentioned in the in Treasury's New South Wales Treasury's consultation paper. When I had a meeting with New South Wales Treasury, I sort of suggested to them they might add a sweetener to this for pensioners, and I was asked how many pensioners there were in New South Wales, and taking into account disability support pensioners, people on care payment, a rough estimate is 1 million people. Give them let's say the council rate rebate, of $250. That's $250 million. I tried to persuade Treasury that this was peanuts, but they would have none of it. That's $250 million, and that's a lot of money. So that's I don't think that's going to happen. Just as we have not been able, in spite of trying, to get concessions on stamp duty, or indeed an increase in the council rate rebate. No, I don't think a discount is part of this.
Okay. Thank you for trying at least, but it doesn't seem all that. The outlook seems rather bleak in that respect. I guess we could transition to. I'd like to ask you, what are the prospects for this successful introduction of the New South Wales property tax?
Okay, well, I already, I think I made it very clear what my views on this property tax proposal is. I mean, I can't really comment on, how beneficial it would be for the economy, the New South Wales economy in general. I'm just looking at it from the perspective of the older person, the property owner, the owner-occupier. What I would say, though, about the effect on the general economy, even though Treasury and the Treasurer are really spruiking the economic benefits, the enormous stimulatory effect of this property tax, almost as if you're being given money rather than paying money. It's going to take 20 years for us to get halfway, half the properties in New South Wales under property tax. So all those general economic benefits are also going to, be drip fed into the New South Wales economy. It's not going to be the 1st of January, the property tax comes in, and 1 year later, the 31st of December, there is this enormous increase in economic activity. You really need to take that for what it is, spruiking. Now, again, farmers, investors, people looking to settle down in a house are not going to opt for stamp duty. It'd be madness to. So it is going to depend on first home buyers whether they want to take this up, and that's why it's going to take such a long time for the property tax to become dominant over stamp duty. One thing that could really sink this property tax proposal is the same thing what sunk the fire and emergency services levy, and that is that there are too many people who cannot pay the property tax. The fire and emergency services levy suffered from the same fate, and there was, because it affected people immediately, it had to be withdrawn as a proposal. So this may not happen with the property tax because it's people, 20, 30 years down the track who are going to feel the pain. But once it gets there, and you can calculate the effects of what happens in 20 to 30 years' time, I think the financial hardship cases, that is, property owners, owner-occupiers who are in financial hardship and can't pay the tax, will be so expensive to the New South Wales government that that in itself is a reason not to go ahead with property tax. I did a calculation. I've got the figures here because I'm not good at memorizing them. If the property tax was introduced next week, in New South Wales, we would have 231,000 households in financial hardship. That is, 231,000 households would not be able to pay the average $1,812 that we're told is going to be the average. So that would cost, or that would lead to a tax deferral, that is a need for the government to loan people the money, as it were, of $418 million a year. Now, if these households are not suddenly all going to win lotto and be able to pay the next year, they're going to continue to be in financial strife. So 16 years, which is the median duration of a retirement, from 67 to 83. You multiply that by 16, you get $6.7 billion in loans outstanding once the property tax scheme is mature. That's in today's dollars, and it doesn't take account of the effects of compound interest, because you'd be paying interest over that as well. So very similar to previous proposals that depended on reverse mortgages and home equity release to pay for things, I think this is going to sink the property tax. And if it's not going to sink the property tax, there will be a crisis down the line when both homeowners who can't afford to pay realize they can't afford to pay, and the New South Wales government realizes it can't afford to lend people that much money to fund its property tax. Those are my predictions.
Okay. Pretty bleak predictions there, Paul. But I wanted to speak about this earlier when you mentioned farmers. We did have a question come in earlier in the week from someone mentioning residential or farmland. Sorry, I'm not sure if you focused on this at all during your your read of the consultation paper. But are there any potential? I mean, how will farmland be affected? Do you know at all? And
yeah, I mean, farmland is currently not subject to property tax because we already do have a property tax for property investors above a certain level. Farmland is not taxed at all. So a property tax on farmland would work the same way. And I can't imagine, I mean, farmland is something that people hold on to for generations. So, you know, the question of what's cheaper, stamp duty or property tax, is just irrelevant. Yeah,
tax is cheaper than a new tax. Yeah, for sure.
Yeah, farmers are not going to line up for the property tax. I don't think.
Okay,
which is clear.
Yeah. Well, it doesn't seem to be all that much of a winner for pensioners or farm owners. This is a real focus on getting people into houses a lot quicker. So really looking at first home buyers, getting them in the door a lot faster. But it seems from your analysis, Paul, and I don't want to put words in your mouth, but you seem to be predicting that it's a bit short-sighted and not this amazing huge policy shift that will result in streamlined income for the New South Wales government.
No, the argument for property tax is that it is an efficient tax. You mentioned that an efficient tax means basically that you can't avoid it. With income tax, there are all sorts of shenanigans that you can engage in to reduce it. Similar with capital gains tax, even the GST you can avoid simply by paying people cash in hand. With land tax, you're sitting duck. You're going to be taxed and taxed all at the same rate. That's what's meant by an efficient tax. And probably there is social equity in that. It's not a bad argument. The real thing is, how do you get from stamp duty to property tax without disadvantaging people. And of course, by simply delaying effectively the introduction of the property tax of, over 20, 30 years, is not really a transition. It's more of a kicking the can down the road to be picked up much later.
Right. Well, I hope for all the viewers who joined us today, our discussion has been insightful, and you walked away with some things to think about. But one thing that you can do is, like Paul and us at the CPSA, we will be making a submission to this consultation paper, and those consultations are open until the 15th of March, I believe.
Yes.
So yes, we can provide a link for you in the chat, and if you'd like to have your say on what you think, then we encourage you to do so. The more people, the better. The more voices added to this discussion, hopefully will result in a good outcome, especially for our focus, which is older residents across New South Wales. But thank you for the chat, Paul, and I hope everyone enjoyed today. And we'll be making this available offline as well. Be uploaded to our YouTube channel, and we'll make everyone aware of that. If you'd like to rewatch it or share it with your friends, that'd be appreciated. But thank you for watching. Cheers.